Welcome back. Let's take a look at the agro space now, and this year has been one of abundance. You have seen higher supplies. The Indian monsoon has been the best in last decade, but even then the food inflation prices have been at multi-year highs. The sugar, of course, has been the most news-driven commodity for the 2013, as has been in the years in past as well. The prices are down 8% in the Indian markets. The UP sugar mills crisis took the center stage when the UP sugar mills did not allow or announced that they would not go on for crushing till the linkage on cane and sugar prices had happened. While the government really hasn't linked the sugar cane and the sugar prices, but they have provided SOPs like interest-free loans and tax waivers, and that's the reason you have seen the sugar crushing come back in case of Indian markets. But the other losers, of course, have been wheat, which is down 19% in this year. The corn prices have been the biggest loser for 2013, down by 38%. The soybean prices, of course, have seen some strength coming in for the previous year. If you look at the various reports and the analyst reports, they say they feel that there could be some bullish trends continuing for edible oil, pulses and coriander for 2014 also, while the bearish bets have continued for guar and most of spices. But let's get in the experts to tell us all of that, and joining us on the show now are Charlotte Kingsman at Platts Kingsman, and also joining us is Dorab Mistry from Godrej International. Vijay Bambani also, of course, continues on the show. Well, Charlotte, let's start with you first. And what's your sense really on the sugar prices, the kind of decline that we have seen in the previous year, and how would you look at the prices now going forward?
Yes, absolutely. We've been in several years of surplus now, and the prices has come down. But the problem is that the farmers are not getting the price signal to switch to another crop. In the case of Brazil, 2/3 of the cane is grown by the millers themselves, so they don't have, in any case, they will have to grow cane. In Thailand, for example, the government's been subsidizing cane. In India, the cane price is fixed, so it's not linked to the sugar price, which means, again, the farmers aren't getting the signal. And this means that they will continue to grow cane for as long as they're getting paid to do it. And cane is a very profitable crop. So this year we're going to have about 5 million tons of surplus. It's about half of what we had in 2012-13, but it is still a surplus, and that sugar is going to continue to put pressure on world prices.
Fair point, Charlotte. Vijay, getting you in the conversation on that one. What's your sense on sugar prices now? Down 8%. We continue to trade below cost of production when it comes to the prices, and it has been a bad year for the sugar industry as per se. But going forward, 2014, does that bring any hope?
I think so, Manisha. At least in the first quarter, or maybe first 2 quarters of the calendar year 2014, I expect prices to go up. There are indications now that Tamil Nadu also is open to the idea of paying higher prices for cane. However, the mills are unable to basically push prices higher at the shop shelf level. So there's clearly a disconnect. You're paying higher cane prices to the farmer. The FRPs are going up, your diesel prices are going up, power prices are going up, farm labor is costing more, your pesticides and fertilizers are costing more, but the mills are selling at a loss. After the elections, or somewhere close to the elections, I expect sugar prices to start moving up at the shop shelf level, and there the financial futures market will also start pricing in those gains. So my guess is sugar in the financial futures market should start to trade well above the 3,000 levels by April 2014.
Okay, so bullish views coming in for sugar, but let's also take a look at the edible oil space. And Dorab, how would you rate this sector performance in 2013 before we talk about 2014?
Palm oil failed us in terms of our bearish forecasts. Prices never came down, and for one simple reason, that the price of crude oil did not come down. The price of crude oil remained quite firm and stable. Brent stayed around $110 a barrel. So that meant that biodiesel became very workable, very economic, and at one time very profitable. So the big story for 2013 was that palm biodiesel saved the day for palm oil prices.
Dorab, if I tell you to put various commodities under categories, how would you do that? For soybean, palm, castor and also soy oil, how would you put them under underweight and overweight?
I would say for the first half of the year, you have to be overweight soybeans, overweight palm, overweight castor.
Vijay, what's your sense really coming in for the edible oil space now? Because while we have seen a divergence here when it comes to the palm prices, castor prices, soybean and soy oil prices as well, what's your sense? How would you want to categorize it all?
Manisha, normally by end of November to at least February, crude palm oil prices tend to rise in the financial futures market, at least on the MCX. This year the rally has either not been up to the expectations of the palm oil traders, and the bulls have clearly not made as much money as they would have made in 2011, 2012. So my guess is once the weather starts to get warmer, crude palm oil on the multi-commodity exchange might actually go below the 520 mark, which is currently at 545 levels. And I do not see a bottom at 520 also. I think it might just go a tad lower than that. We need to take a view thereafter as to what crude oil prices are doing, because if the fossil fuels are higher, as Mr. Mistry also pointed out, the biodiesel and consumption from the automobile industry itself will cushion the declines. But I would need prices to go above the 575 to 580 levels to basically get the bulls back onto the buy side and get into a serious long position build up here. Failing which, I think 2014 may not see the kind of action that we saw in 2011.
Well, as you pointed out, Vijay, it really is going to be about the crude oil prices. Dorab, that's the second question to you as well. When the prices are estimated to stay higher in 2014, would that also mean that there's going to be strong biodiesel demand and thus the palm oil prices also are bullish?
Crude oil market should remain relatively stable to firm because there have been smallish disturbances all over the place, and it is not yet certain whether the Americans and the allies will allow Iran to export as much as it wishes to export. So given the fact that demand is going to rise because the world economy is improving, I think crude oil prices, Brent particularly, should not fall below $100 a barrel. My own estimate is that somewhere between 95 and 115 is where it will keep trading throughout the year. So if crude oil remains relatively stable, then you can't expect vegetable oil prices to fall. I'm afraid that is one of the key reasons why I feel that the market initially will go sideways and after that it will go higher.
Fair point, Dorab. Shalini, I just want to come back to you on the sugar surplus that we are seeing not just in the Indian markets but the world season as well. What's your sense on that number?
Yes, exactly. In the case of India, it's because of the cane price is high and is keeping the cost of production high too, which means that millers are not willing to discount their sugar further enough for them to export it, and they've been carrying a lot of 2012 and 13 sugar in their warehouses, and we're now entering a new crop and they haven't sold all of the other crop. The rest of the world is seeing a similar problem. In Thailand, millers aren't satisfied with the world price. It's below the cost of production too, and they have been carrying some sugar for it. So on the one hand, you have farmers that are getting a very good money for their crop and will continue to grow their crop, and on the other hand, you have mills that are not able to sell their sugar. And that's why we're entering this year of not only additional fresh production surplus, but a carryover of the surplus from last year.
So Charlotte, on light of that, how long do you see supply-demand mismatch to continue in the world markets?
The surplus will continue as long as farmers grow cane in that quantity, and farmers will continue to grow cane if it's profitable. So until the farmers get the price signal to switch to another crop, we are going to have more sugar production than the world needs.
All right, so Dorab, let's come back to soybean prices now. And what's your view on 2014? It has been a bullish commodity in 2013, whether it was rupee impact or the strong demand or the global market sense as well. How would you now price 2014 for it?
I think soybean depends entirely on the South American crops. At the moment, people think that big crops are going to be produced in South America. I would caution people, there is always a sting in the tail of this tiger. And we have to watch the dryness in Argentina in February, which is when the crop will be made. If everything goes well and we have giant crops in Argentina and Brazil, then soybeans in the second half of the year could come down. Otherwise, I think there will always be an inverse in the soybean market. The only position where one can be bearish on soybeans is the November contract, which is the new crop US soybean contract. Otherwise, I wouldn't be bearish on soybeans.
Alright, so we have bullish cues on soybean, on palm and sugar as well for the next year. But before we end this, Vijay, one final quick word from you on grains, because we are getting into that food security bill as well as we get into the new year. What's your sense then for grains and pulses, and which one would you want to choose as we approach 2014?
Manisha, on food prices, I'm bullish because the trajectory of inflation still remains up, though the velocity might slow a little bit. Between the two, I would favor pulses. My clear choice would be chana rather than wheat, because wheat prices will not be allowed to move up in percentage terms as sharply as chana prices move. So if you're getting chana prices in the March and April contracts at a sub 3,000 levels, I think it's a buy.
Okay, so very bullish on food commodities. We have had all buy calls coming in from our experts in 2014 as far as the agro commodities are concerned. With that, Vijay, Dorab and Shala, thank you so much for joining us and giving us your sense on how to approach 2014. And that's all that we have on this very special show on hot commodities for you. Thank you for watching.